So today in our Super Sunday, our second presenter is Anant sir. He doesn't need any introduction. He's a very veteran in the market. I have seen all kind of faces in this market, and probably he is the best to explain what kind of current scenario Indian market is going through. So I'll hand it over to Anant sir. Sir, the dice is all yours.
Good evening, everyone.
Sir,
I hope you are having a wonderful time at home. Well, the lockdown was something which could not be forecast, but now that we have it, we just need to endure the whole thing.
Sir, there is a saying, if you can't avoid it, enjoy it.
Well, today I will talk about the markets. I will show you a few interesting stuff, and later on maybe I will take questions. Now here it goes. Today's presentation is about analysis of the Indian stock markets from a Gann and Elliot perspective. I will show you how Elliot can be used to forecast the prices and also where we can find a bottom. Then I will take you to certain examples of Gann where I will show you when and where the bottom on NIFTY will be found. Plus we will also map out how the NIFTY will unfold over the next 2 years. Let's see what everything that we are going to learn today. Well, at the beginning, this is a statutory disclaimer. I am not your financial consultant. Any investment advice, investment actions, trading actions that you take are entirely at your own risk. Please consult your financial advisor before you take any actions. I cannot be held responsible for any profits or losses that you would make based on actions that you take on what I have presented today. Having said that, let's move ahead. In this presentation today, I will show you how the depth of correction can be found on using Elliot. Then we will look at the patterns that will unfold for the corrections. Then we will look at some real markets and real charts and see how our projections would work. Then we will look at the depth of correction, how Gann used to forecast it, and how precisely we can understand the price levels at which the markets will find a bottom. Then we will look at the patterns of correction that Gann forecasts. Then we will look at real market charts for projections of those correction depths. Then I will show you something which is very easy and which you can apply from tomorrow itself, the Gann master time factor, which will give you the advantage and the skill of being able to tell when the market will change its trend in the future on a daily chart. Then we will put it all together and see what it holds for us. Later on, if time permits, we can look at taking some questions. Okay, now let's move forward. Depth of corrections. When we look at Elliott wave has a very different way of looking at depth of corrections. Many individuals or many analysts use a Fibonacci retracement, but whatever our research has been, and my research over the last 30 years, what I've seen is that the market itself tells you where it is going to correct. And as it is going up or coming down, the pattern that is being unfolded, that shows you the level at which the market will come, find support and go up, or find resistance and go down. Let's have a look at the video. Then I'll explain.
Broadly speaking, retracements to motive patterns are seen to these three levels. Bottom of wave 4 of the motive wave. Bottom of wave 4 of 3 of the motive wave. Bottom of wave 2 of the motive wave. we look for trend change patterns and pattern completion at these levels. While we look for trend changes at these levels, we should also keep in mind that the markets do not perform to mathematical precision, and we should be flexible in applying these levels. So while retracing the motive wave, the first level that retracement needs to retrace is the level of wave 4. When this level is broken, we can expect markets to continue in the retracement towards the level of wave 4 of 3. But why wave 4 of 3? In a normal impulse, you will see that wave 4 in an impulse retraces to the level of wave 4 of wave 3. At a lower degree, wave 4 is correcting the impulse of wave 3, and the ideal retracement for wave 3 lies at level of wave 4 of 3. However, when the trend is strong, wave 4 does not test the level of wave 4, but ends abruptly and leads on into wave 5. In such a case, where level of wave 4 and level of wave 4 of 3 are at different levels, the ideal retracement level lies at the bottom of wave 4 of wave 3. If the level of wave 4 of 3 is also broken, then we see retracements retracing to the level of wave 2.
All right. Now that we have understood where NIFTY or where an impulse will correct or how far a correction will go, which is basically after a completion of an impulse, the correction will go to a minimum of wave 4 of the earlier impulse. Or if it breaks that, it will go to wave 3 of the earlier, wave 3 or 4 of the earlier impulse. Or if it breaks that, it will go down almost to the depth of wave 2. So let us see on the monthly chart of NIFTY and see where we will find our support. This is the NIFTY monthly chart. Now this count may be open to interpretations, but broadly speaking, when you look at a monthly chart, the wave 4 level actually lies at 3,000, 2,250. Well, that may or may not be hit, but that is an extremely theoretical level. We will need to look at some practical ways of what the market is going to do. Now, moving to a weekly chart. When I teach Elliott wave and I show people, most of the time my job is always to make it very simple so that everyone can analyze it or apply it and use it to trade. We can keep interpreting many things on this entire pattern here, but since we have understood what the markets can do from the pattern itself, we know at every bottom that it has found here would be probable wave counts where the waves have ended. So the first level which I was looking at when the market started collapsing was around 10,000. Once it broke that, I looked at 9,950, which was the March 2018 low. Then I looked at it coming down till here. It came down to 7,800 and found support and went up. If it breaks this, then I would look at it coming to 6,800. And if it breaks 6,800, then nothing can stop it from going to 4,500. So it's a long way away. And when we look at other charts, when I share with you the Gann projections on how we get down to the time and the price, then you will understand why market will do what it is going to do in the next few months. Now, the similar pattern, let us look at the Bank Nifty. The Bank Nifty also appears to have completed a 5-wave pattern, which is very clear. Now, we could keep debating, is this wave 4, is this wave 4, is this wave 4? It really doesn't matter, because if it has to come here, it will break this price first. So we will wait till it breaks this price and only then forecast the next price movement. We cannot forecast here that it is definitely going to come here. So as on today, since Bank Nifty has started, the earliest wave 4 is here. So whatever happens when the market grows, at that time, I said whatever happens, Bank Nifty would be the weakest and it would test this bottom here at 13,000. So without testing 13,000, Elliot says that the market simply cannot go up. Now let us look at one more chart. 3 charts which I am showing. Now this is the weekly chart of Bank Nifty, where we don't know where it is going to stop. 13,463, maybe 8,000, maybe 3,000, maybe. I do not know at this point in time. But having broken this level, it may waste some time here, but it ultimately has to test this level. Will it seek support here? Maybe. Or will it break? Maybe. Do not know. But it is likely to test this price now that it has broken this level. So these are the levels which you can see highlighted in yellow, where the markets are likely to find a bottom. When we start applying Gann, we will understand which one of this is a more precise level. We will come to that later. Now let us look at a Reliance monthly chart. 1, 2, 3, 4, 5. Reliance started collapsing. Target, which had been screaming all the way for the last 1.5 years, was 400, which is the wave 4 level. Will it go there? I don't know. But looking at what the markets are doing, that is what is the likely target. And here, understand one thing. This is a 21-year chart. This is a monthly chart. So this may take months to even reach there. Don't expect a collapse in one day. Don't expect a collapse start in a month. Another thing is, everyone has been asking me questions. Sir, market bottom ho gaya? Abhi buy karne layak hai? Abhi kya buy karo? Very simple point. Market has been going up for the last 12 years. A 12-year bull market cannot end in a 2-month correction. You need a longer time. What could happen is we spend months at this level, make a small dip, and then run off again. Entirely possible. But this 3 months is definitely not, because Elliot says that the next rally which will come here is likely, most probably, a suckers rally where all the last buyers get trapped in. Okay. Now let me show you the Reliance levels. Reliance 868, it touched 868 and bounced off. If it breaks 868, it is heading to 650. If it breaks 650, it is heading to 410. Will it break? Don't know. Only time will tell. All right. Now, you can look at any of your charts and you will see that most of the scripts that we are trading have always found a bottom at their previous level bottom, which would be wave 4. And then it will skip one and go to the next. Those who have taken Elite Wave training, they understand what I am talking about. Now, corrective patterns, when you approach from Elite Wave, I'll now show how this pattern is going to unfold in the future. Before that, we need to understand what kind of corrective patterns are there with Elliot. Let's just look at a small video, then I'll explain.
Corrective waves. Corrective waves, as the name implies, correct or retrace the movement unfolded by the motive waves. These waves give respite to the fast-moving market. We can see all retracements, all pauses, and where markets move sideways unfolding as corrective patterns. Numerous variations exist within the corrective patterns, but we can broadly divide them into 3 classes. sharp patterns, sideways patterns, and triangles. In sharp patterns, named zigzags and double zigzags, we see a swift retracement of the markets. Sharp patterns normally tend to affect a deeper retracement of the earlier impulse. In sideways corrections, named flats and double trees, markets unfold a shallow retracement over a prolonged period, appearing to generally waste time within a narrow price range. The triangles are also a sideways correction, but triangles are made up of 5 waves. They are the only corrective pattern to unfold in 5 waves. A fourth.
All right. Now here it is. Nifty or in all markets across the globe have been falling in a very sharp, swift downward trend. So we can eliminate that it will be a sideways pattern, it will be a triangle. We are looking at a zigzag or a double zigzag. Mind you, the 2008 fall that we had was a perfect double zigzag. And right now we appear to be somewhere either here or here on the Nifty, which implies we will have one more fall, then a sharp rally up. What you have seen is just a part of the correction. Once a decline, then there will be a very sharp rally up. Post that, there should be a decline. This is the pattern that Nifty is likely to unfold. It could change, but at the moment, this is what it is looking like. Let's look at the next one. Now look at this here, the Nifty weekly. This has been a straight line. Now this straight line is what we call a wave A. Post this, we will have a wave B. Post that, we will have a wave C. Until the wave C is complete, this correction cannot be complete. Those who have taken elite wave classes with me understand that this impulse cannot stand by itself. It needs one more wave after this. Without one more wave coming down, market just cannot find the bottom. But this is not, it is not all scary at the moment, because everyone who's got stuck in the market right now will get a phenomenal rally here to exit out of their positions. This would be the time to actually cut your losses, make whatever you can, and get out. I will tell you when this will come in later when I show you Gann. Gann would make everything very clear and very simple. Okay, let's move ahead. Now this is the bank Nifty. It is going to bounce back and it will come to test 13,600 level or 400 levels. It will take time. Of course, this is a weekly chart. So we are looking at least 6, 8, 10, 12 weeks away, which is 3 months away before it reaches those kind of levels. And God forbid, if it breaks this, then we may even go to 8345, but I'm really not looking at it. This seems to be a very solid support area here, because this has been a resistance earlier. So I am expecting a rally, then a breakdown into these levels much later, somewhere into 2022, and then it would go up. Same goes with Reliance. Found a support here, gone up, come back and test. Will it stop here? We will see. Will it stop here? We will get to know. But these levels become very, very important for the market. 868, 649, 410. Probably Amit will share the video with you, and maybe you can, if you can take note, whatever. We will find Reliance testing somewhere of these, and so will the other indexes. We will find one of these points becoming the turning point for the market. Now, having said that, let's move to understand how to use these numbers itself to forecast markets. This is very, very easy. Gann always talks about numbers. The market is a system of numbers and pure arithmetic, and pure numbers, and the numbers work phenomenally well. You can even forecast right down to the last point and sometimes to the last day. Let me show you some true magic here. Gann used many systems: arithmetic, geometry, trigonometry, music, astronomy, numerology, and time cycles. Each one will work efficiently by itself, but together when you mix all of them, they are miraculous. We will look at the arithmetic approach, which will be the easiest for you to apply in all your stocks. I will show you the system and you can apply it on your own, on your stocks and whatever you are trading. Stocks, commodities, forex, futures, anything. Gann stated that price and time are interchangeable, meaning price becomes time and time becomes price. Let's look at what actually that means. Present time becomes future price. Present price becomes future time. So what exactly does he mean? I'll show you with an example which will make it very, very, very clear. Let us see how this will help us. Here I am converting price to time and forecasting the next high or a low. Let's see. The Nifty high of 8th Jan 2008 was 6347. You can do this all by yourself. Just pick up the chart and you can find out the values and calculate on your own. The Nifty low of October 27, 2008 was 2252. The range between the high and the low is 4105. Now I convert this 4105 points to time. How do I do it? I simply call it number of days. Very simple. Price has become time. 4105 rupees, 4105 points has become 4105 days. Now what do I do with this? I take October 27, 2008 low, which was the low date, and add 4105 calendar days to that date. So 4105 days after October 27, 2008, if you calculate, you have to calculate calendar days because time does not stop for anyone. Time is relentless. Many make a mistake of calculating trading days with holidays not factored in, which is where they go wrong. If you just calculate 4105 days from October 27, 2008, and 4105 days was the range from the top to the bottom, miraculous, you will get a date 18th of January 2020, which is a Saturday. And the next trading day after that, the market puts in a top, 20th January 2020 Monday. I knew this for 8 years, and for the whole of last year I was screaming, you do not know what is going to hit you, watch out. You do not know what is going to hit you, watch out. And I was abused left, right and center, but it was a simple addition of numbers and nothing else. Now let us see one more. Let's see how this will help us for the future. Nifty low of October 27, 2008 is 2252. Add January 8, 2020. This should be January 8, 2020 was 12,430. The range is 10,178. Now 10,178 is almost 30 years. It will not help us. So what do? We just divide this by 10 and come to 1,018 days. And then what do? We add to January 20, 2020, add 1,018 days, and there you have your forecast date of Nifty bottom, November 3, 2022, Thursday. Simple. You will not find a bottom before November 2022. Come what happens. Expected market bottom, November 3, 2022. Now, so far I have just converted price to time. Let us convert time to price. Now here is the time to price conversion. Nifty high date was 8th of January 2008. The Nifty low date was earlier low date was December 4, 1996. if you take the number of days between, understand here we are converting time to price. So we've taken the total number of days, and that is 4,052 days. And what do? We call it 4,052 points. So the Nifty hit a high on January 8, 2008, which was 6,347 minus 4,052. And voila, brilliant. We got a price of 22.95. And what did the market do? 22.52 was the low. You could forecast this entire thing on 8th of January 2008 that this will be the low. It hits 22.52 and comes back to close at 25.20 on that day, and it never went back to this price again. Now, let's move on. What will be the forecast for the present Nifty?
Anant sir,
the high date is January 20, 2020. The prior low date is October 27, 2008. The range is 4,105, but we have already broken 4,105. So what do? We subtract it 2 times. This is your Nifty projected price. But when is this going to come? On the 3rd of November 2022. That's a long way away. Now what will happen? Now when we looked at Elliott wave, we saw that the pattern will go up into a zigzag A, B, and a C. So if you see here, there is 2022, and what was our forecasted price? 4,300, 4,200. So this is the area you are going to hit when Nifty comes to test the bottom. So let it come up. If you are inclined, I would advise everyone, have a look, understand where you stand, and this is where we are heading to. This is my analysis. Post this fall, which will complete, I'll come to when it will complete, and then it will come down in one more collapse later. This way. Now, having done this, we can look at many different ways of many different charts, and you will always be able to forecast this bottom from the time taken here, and from the price movement you will be able to forecast the time this will come reach here. It's a very simple process. Now, to help you aid in your trading decisions from tomorrow, I wanted to share the Gann Master Time Factor, which is as simple as looking what happened in the past and forecasting what will happen tomorrow. This is a slightly flexible system. It is a day plus or minus, but it always works. Let me show you. There is a time factor of 20 years, and half of that is 10 years. So for Nifty, if you have a 20-year data, you can use 20-year chart, or if you have a 10-year chart, if you go back 10 years, you will be able to forecast when the trend change times will be. Let me show you. Now, these are 2 charts. One is 2018, one is 2008. Now, October 27, 2008, Nifty hits a bottom. The same October 26, 10 years later, Nifty hits a bottom again. Surprised? By just knowing what is happening on the left-hand side, you can tell what will happen on the right-hand side. Let's look next. November 5th, it posts a top. November 5th, it posts a top again. Then November 10th, December 10th, it posts a top. Again, here we get one more secondary top. Then November 19th is a bottom. Here November 19th is a top. It inverted. Then December 1st is a top. December 3rd is a top. Why? Because December 1st and 2nd were holidays. December 19th is a top. December 19th is a top. December 29th is a bottom. November 30th is a top. It's as simple as that. Just go back 10 years. If you see trend change there, you can expect a trend change here. Very simple. If the market going up in the last 3 days, expect it to turn down. If the market is coming down in the last 3 days, expect it to turn up. Very simple. Give me a minute, please. Yes. Now let's move forward and look at this. Can you guess which year is this? Exactly. This is 2019 and this is 2009.
Sir, Sita Maiya
This
candle.
is what happened. You could have forecast. There are many ways to forecast the 19th September bottom of when Nirmala Sitharaman gave the phenomenal news and market shut up. This could have been forecast by anyone who understands Gann and anyone who understands the time factor. There you have a top. Again you have a small bottom. Again you have the small one. So you can keep continuing this. That is all I have for you today. I hope you have enjoyed. It has been a very short presentation, and whatever questions, I think I don't know how the questions would come in, but when they come in my timeline, I'll have a look at it.
Anant sir.
Thank you very much and trade well. Thank you.
Anant sir, you are able to hear me?
You can take over.
Okay guys, if you have any question, you can go and ask on Anant sir's timeline. It's at the Anant Acharya on Twitter, and he's always available. I think it was an eye-opening session. Sir ने बताया कम डराया ज़्यादा, but maximum time I have found that he is right. Timing may be a bit over here and there, but he is right maximum times. This whatever he have shared in Traders Carnival 2018. I still remember all those dates, because when you were backtesting it, this proved out to be one of the fantastic. So with this we end this session, and I'll upload this video soon. Okay, thanks everybody. Bye, take care, good night.